Have you ever heard the saying, the first $100,000 is the hardest? That idea has been repeated by many successful investors because it highlights a powerful truth about wealth building. The beginning feels slow, sometimes painfully slow, but once your investments begin working alongside your income, everything starts to change. Today, I'll explain why reaching your first $100,000 is such an important milestone and how to stay focused long enough to get there. Early in your financial journey, most of your progress comes from your own effort. You're learning to earn more, spend intentionally, save consistently, invest regularly. Your portfolio isn't doing much of the heavy lifting yet. You are. This stage requires discipline because the visible results may seem small. But you're building something much more important than money. You're building habits. As your investments grow, compounding becomes more noticeable. Instead of relying only on new contributions, your existing investments may begin generating additional growth over time. This doesn't happen in a straight line. Markets rise, markets fall. But staying invested allows time to work on your behalf. That's why consistency often matters more than trying to perfectly time the market. Something else changes as your portfolio grows. Your thinking evolves. Instead of asking, how much can I spend? You begin asking, how much can I invest? You stop looking at money as something to consume and start viewing it as capital. Capital has the potential to create more capital. That mindset shift is one of the biggest differences between building income and building wealth. As your asset base expands, you may begin seeing multiple sources of growth. For example, investment appreciation, dividend income, business profits, rental income. Many investors use diversified investments such as VOO, SPY QQQ. The important lesson isn't choosing one specific investment, it's consistently owning productive assets over time. Many people never reach six figures because they make one of three mistakes. Number 1, they stop investing during market declines. Number 2, they increase their lifestyle every time income increases. Number 3, they chase quick riches instead of following a long-term plan. Wealth is usually built through consistency, not constant change. Reaching your first $100,000 isn't the finish line. It's the beginning of a new phase. Now your investments have the potential to contribute more meaningfully to your financial growth. Your focus shifts from simply accumulating money to building a portfolio that may eventually support your lifestyle through income and long-term appreciation. The first $100,000 isn't important because of the number itself. It's important because of who you become while building it. You become more disciplined, more patient, more intentional. And those qualities often matter even more than the dollars in your account. Because wealth isn't built in one giant leap. It's built through thousands of consistent decisions, made over many years. Keep going. Your future self will thank you. This video is for educational purposes only and should not be considered financial, tax, or investment advice. Every investor's situation is unique. Consider consulting a qualified financial professional before making investment decisions.